Hello and welcome to the Edwards Economic Research Show, the show that brings you news, views and interviews on business in Dubai and the Gulf. We'll be talking today about property, how to invest, how to live, how to find it. We're very happy to have with us Rob Lovett of Landmark Properties. Rob, thank you very much.
Thank you for having me, Bob.
Rob, would you like to just tell us a little bit about your personal background?
I came to Dubai about 7 years ago, originally in banking with Merrill Lynch. I came from New York, where I was with Citigroup and Merrill Lynch in investment banking. I'd been in the Middle East before, and I wanted to try out the GCC. And I came here in banking, and then I saw Dubai growing around me. And I had to make a decision after 3 years whether to go home to the U.S. and continue in finance or asset management, or stay here and partake in the growth. So decided the easy decision to stay here with partners and start Landmark Properties.
Why don't you give us some background on Landmark Properties?
Landmark Properties is a full-service real estate brokerage consultancy. We do sales and leasing for properties in Dubai and the UAE.
But if I understand correctly, you are not a developer.
We are not. As a full-service brokerage, we cover the entire market. So developers sell their buildings. We carry both the secondary market inventory for those buildings. We have agreements also directly with the developers.
You put buyer and seller together.
Correct. Sometimes matching the secondary market, and sometimes matching them with a current development.
For example, if I had bought a property in one of the projects, MR, Nakheel, whatever, and I wanted to sell it at this time, I could come to you.
You would come to us, and we would list it. We have an inventory with over 10,000 listings on the secondary market, which is the largest in the market. We do about $2 billion in sales in dirhams per year, and about 170 million in leasing. And the bulk of our business is resales. In other words, selling an individual like yourself's units to a buyer coming to us.
And the same would apply if I were a developer, let's say.
We have sales agreements with most of the developers in the market that we have approved for sale to our clients. MR, Nakheel, some of the second-tier developers, as they're called, in other words, developers, and also newer developers.
Is this only onshore properties, or are you also working with the offshore developments like the Palm and the World?
Yes, we deal with all UAE-based properties.
So not only Dubai, it's also Abu Dhabi, Ajman.
It is, although most recently in Abu Dhabi, it's really only been 3 or 4 months that expats or foreigners could participate in long-term ownership there.
Yes,
in fact, it's only been 3 or 4 months since UAE locals could participate in ownership there, which is a very exciting development for us because the Abu Dhabi's acknowledgement of long-term ownership is, we believe, a final step towards firming up of a federal law.
Rob, would you like to give us a history of the real estate market in the UAE since the long-term ownership concept came into existence?
Long-term ownership was introduced at the end of 2002 by Sheikh Mohammed bin Rashid and Sheikh Maktoum in Dubai. The earliest developments were the Palm and the MR projects, the Greens and the Marina Towers and the MR Towers at the Creek. In general, the government gifted certain lands to the major developers at zero cost. And Dubai was trying to attract more FDI, more international capital, and anchor people to stay here longer. In late 2002, these initial projects were launched, such as the Palm Island Jumeirah, and the Greens and the Marina Towers. And because there were so few units, and they were the first ones that were launched, there was a mad rush for families who had lived here in this country for 30, 40 years. The opportunity to have a long-term ownership was something special.
So the first customers, in essence, were people who were already living here?
I'd say it was a mix. I mean, in the beginning, because these properties were offered fairly cheaply at that time as a hook, or an anchor. In essence, they were offered at the build cost plus a premium put on by the developer. In other words, the land cost wasn't really built in because it had been gifted. I'd say it was pretty much split 50% speculators and 50% expatriate families here who were coming in. And the terms of pricing that I'm talking about in 2003, let's say. For apartments, they were as low as 450 to 500 dirhams per square foot. And in villas, they were as low as 300 dirhams per square foot. Since then, we've had 3 years of sales and resales and plots that cost money that were being sold to sub-developers or private developers. And those inherent costs have made the total cost of the units more. On average right now, an apartment might be 1,000 per square foot, and a villa would be around 650 per square foot right now.
Now, is there any right to the land that accrues with the purchase of the property, or is land completely a separate issue?
Until freehold law comes into existence, what you have right now is title for the building on the land. You do not own the land itself.
Is the developer making any commitment to the buyer that at some point, when legally it's possible, the land will also come with the building?
It's contract by contract, but if you look at from the major developers, they do say within the contracts that if freehold law is in fact enacted, that it will roll into, their agreement will roll into the new law.
Does that mean the land comes free at some point?
The land comes free for the people who bought in the beginning. For people who bought right now, if I'm a developer buying a plot of land, it certainly is not free.
Okay.
It is being resold by Imar or Nakhil or secondary buyers at a vast premium.
Rob, if I were an investor coming into Dubai and interested in investing in property, are there any recommendations or guidelines or things to avoid that you would advise a person like myself?
Definitely, in a brokerage like ours, our job is to advise people. So when someone walks through the door, we have to first ask them, what are your goals? Are you looking to be an end user to live in the place? Are you looking for investment alone? What is your budget? Are you committed to that budget? Do you actually have that money? Can you afford this place, really? And once we establish that, then we'll take them through what is in the market. And frankly, what's in the market right now is a pipeline of properties, and within that pipeline, almost 90% is residential and 10% is commercial.
So one choice to make is, do you want to be in residential or do you want to be in commercial or industrial?
Correct.
Are there better returns in one or the other?
It depends what time, and what time you're investing. In the beginning, because everything that was launched was residential and there was very little supply, the only choice you had to make was between a residential villa and a residential apartment. Yes. Now you have affordable apartments, luxury apartments, office, retail. If I can go back to the pipeline, if 90% of what's supplied right now is residential, 3/4 of that is luxury residential, especially on the apartment side.
Very heavily skewed towards the top of the market.
It is, and the advice that I would give is if you pick up the property section and flip through it, you'll see exactly what I'm saying. It's tower after tower after tower of residential luxury apartments. Okay. And oftentimes when people walk in, they say, we'd like to buy that because that's what's there. And I want to buy directly from the developer because I don't want to go into the secondary market through a broker because brokers cost money. But in actuality, when you go to purchase a property, you should evaluate always on a price per square foot basis. Yeah. So if a project was launched 2 or 3 years ago, let's say at 1 million dirhams for an 1,000 square foot apartment, that same 1,000 or the same type of unit today could be launched 1.5 million from the developer. And someone would be drawn to the developer because they're buying it straight from the developer and they pay the checks directly to the developer. Whereas, in fact, the one that was launched 2 years ago is cheap for the identical unit. 1,000 per square foot versus 1,500 per square foot.
Right.
So,
but there's more risk.
Paying a broker is not always a bad thing.
Are you saying that in general it's not a bad idea to look at older properties, even with the premium that you might be paying?
In general, it's good to look at the entire market of what's available.
Okay.
And I would say if you wanted to make a generalization of our turnover, within the past 6 months we've seen a change from people who used to buy off of plan a lot to people who are purchasing properties that are ready. and
Okay.
are paying a premium for that because they can look at it, they can touch it, it's tangible.
We're going to take a short break. We'll be right back.